Hello everybody, this is Jose Blasco. Today is May 4 and we are about to begin with the trading and review session. I will show my face in just a moment. Here we go. Hello everyone, good to see you all. As we're getting ready to begin the session, as you can see on the screen, it will be important for you to enter the chat room using the room key 47639. You can do that using the website web.speakup.info, where if you haven't yet, you can also download the mobile app and you can do it from your phone or tablet if you prefer to do that. Before we get started, I am highlighting in the bottom part of the screen our financial disclaimer. It's important stuff, so I'm counting on you to read it completely. And in parallel, I am guessing that you're going to be getting into the chat room, and it would be appreciated if you could just send a quick hello message from there, so I know that you are in. I know that you are able to communicate, and I am able to read you, so we can have a powerful session where we become very nicely interactive, because again the title of the session is trading and review, meaning that happy to trade, happy to find market opportunities and so on, but especially if we do it in the context of a review, meaning questions and answers. I assume that you have been trading, practicing, putting together your methodologies, back testing, and all of the above, and probably you have questions, and I'm here to help. So please do that. Get into the room using the key 47639. Type a quick hello message so I know you're there, and we will begin in just a second. Okay, so I'm just gonna mute myself 1 second to give you time to do that, and we start in just a moment. Okay, thank you so much. Looking forward to reading your quick hello message. Okay, that will tell me that we're ready to go. Okay, everyone, I'm just wondering if sound is good, because I am not sure why I'm not getting any message. So just checking here from my end. One second, I am just double checking everything is good. Yes, everything is indeed good. So I guess that you simply probably need just a little bit more time to enter the room and set yourself up and enter. Okay, so good. So I'll do that. I'll give you just a minute or two. So it's 33 now in the time. I wait until 35 and we begin. Again, on the screen you can see web.speakup.info. If you go to the website, you can just use the web itself with the room key 47639 and enter the chat room where we can interact, message each other, and talk, which is the way for us to interact during this live session. And if you prefer from that website to download the mobile app and have the chat room on your phone or tablet while you are attending this session, I guess probably using your computer screen. You can obviously also do it with the phone. So that would be ideal. Okay, very good, cool. So I think it's time to get going. Again, I'll leave the information on the screen for a little longer so everybody has time to sign up, so you can be on the chat room ready to interact. Okay, I can see Mark now is typing. Very good. How are you, Mark? Good to see you, my friend. And again, very happy about seeing that the chat box is now working. That feels better. I was feeling maybe there was a technical issue. So perfect. Thank you for that, Mark, and everyone else. I guess you just need a little bit of extra time to be all set. But please do not be a stranger. And if you are new to the session, just know that this is a coaching session. And obviously, this is not a session designed to be like a course or a monologue. This is a session designed to be interactive. Some of you may be newer to trading, some of you may be very experienced, some of you may have time to trade in the past few weeks, some of you may have may have had no time to trade. Again, some of you may be short-term, long-term, options, futures, you name it. So I am expecting questions from you. I'm ready to provide some support, coaching, and if we need to take one of your topics and convert it into a special lecture, I'll do that. Happy to do that. But again, I'm willing to be working with you. I'm ready to be working with you, and therefore I do not expect you to expect me to go through a pre-planned session, because that's not the plan today. Earlier this week on Monday, we had an open meeting. You can see all of this in the calendar on our website. In case you're not familiar with it, go take a look. tradewithufos.com/calendar. So twice a month we do open meetings on the Mondays, where it's a bit different as a format. But today is trading and review, meaning that I'm expecting you guys to come to me with questions out of your practice, or maybe attending a course or whatever that is, and you need support and reinforcement. Okay, so that's what's in my mind. Here we go. So we got Mark. Also, I got a message from Jeff. Not sure. He was telling me that he's having problems to log in. So let me see. Just asking Jeff if he was able to log in, because I know he has questions for today. So I would like to give him time so he enters the room. Anyway, Mark, today looks like an iron condor day for options. Okay, so well, let's do our analysis. Maybe one way to begin the session is to look at the S&P. Everybody, I guess you can see my screen. You can see I have the S&P 500 chart loaded, and in that sense, if I was to zoom in, what I have on the left, which is a daily time frame of SPY, the S&P 500 ETF. So when we look at this particular chart and we look at what's happening down below when looking at auto climate, and also the volatility comparison for calls and puts, so we can see that we are in a down climate. It is confirmed as a down climate with a thick dot. So initial thought would be, let's get ready to get short. Why? Because we are in the market condition number 2, where a statistical normal duration of this climate would be 4. So in other words, there is room for this market to continue going lower based on that measurement. And in that sense, it would be time to start getting short. Now, there is a note of caution here when looking at the next number, which points at 125, which is the maximum number we've got in this red climate, 125, which indeed surpasses what a 2 standard deviation of max distance is. In other words, while the duration of the climate has been kind of like half of what it's a normal thing to happen, which is 4, 2 is half of 4. So while the duration is something that is not, raising any attention, is not catching our attention in any way, the max distance is, because that market has moved statistically too far too fast, which is what max distance means, and 2 standard deviation obviously falls under something that is now less likely as we are surpassing 125. So we are dealing with a market which is technically, statistically, in an unsustainable condition. Of course, we've seen cases of, like for example, statistics suggest climate should be 4. Next thing you know, you got so many more dots than 4. So that was a very extended climate. Again, technically speaking, that is not sustainable, and in the end, it changes. But again, statistics are there to serve as a reference. Okay, so the fact that I'm saying that the climate is unsustainable, statistically speaking, right now, doesn't mean it's not going to continue going down for a little more before probably then a change of direction will take place. But the fact that today already we are reaching 125, which is more than 0.93, basically tells us that we are late to the party. If you wanted to short, It's too late. Can it keep going? Yes, but entering now, it's not really an advantageous position in which to enter, because while it could keep going down, many times, you would find that it's not going to go too much further away because it's already reached two standard deviations. Like, for example, you can see on the prior climate, the blue climate here, that was very extended. Okay, so the statistical direction is 6. So if you were to count around 6 candles, somewhere here, and you were to look at where is that, okay, so 6 candles is more or less here. So did it go a little higher before it changed climate? Yes, it did, but it's only that little bit. Only that little bit, where if you quote the climate from the beginning, okay, so now we are talking about all these sides of a move where the extra duration that was unlikely only did that extra little tiny more. So in other words, even if the climate was to last more, what we find many times is that from a size of the move point of view, the expected move that may still come is not going to be paying that much. So in other words, we are late to the party, and if there is still a little bit of party left, well, maybe there is not much food left for the remainder of the party. Okay, so in other words, going short, while statistically speaking we are in a down climate, going short is not too interesting. So this is one part of my analysis. Okay, I see a few more questions there. Ahmed, good to see you. Very nice to see you, Ahmed. Yes, and I see your other question as well there, Mark, with Ninja. I'll get to that in just a second. Yeah, Jeff seems to be having problems to log in the room for whatever reason. I'm sorry about that, Jeff. If you're watching this recorded, I know you had questions for today, so I'm very sorry about that. Anyway, so one part of the analysis had to do with what I just explained. The other part of the analysis now, instead of looking at the chart, is looking at options data. And a very simple way to look at options data, and very powerful, type of information, is to look at the volatility comparison, where we look at implied volatility of the calls in blue color and implied volatility of the puts in gray color. And we can see how the implied volatility of the calls, blue, is 17 something, where the implied volatility of the puts is gray color 14 something, meaning that calls are above the puts. And the only way this happens is that more calls are bought or more puts are sold. So if more puts are sold, the gray line will go down, because by selling many puts, the price of the puts would go down, the implied volatility built in the puts would be less, so the gray line will go down. By buying many calls, the price of the calls would rise because of demand, and as the calls go up in value, the implied volatility of such calls also go up in value, and therefore the blue line would be above the gray. So I don't know if what's happening here is that more calls are bought or more puts are sold, or is both at the same time. More calls are bought while more puts are being sold as well. I have no idea which one is one, but in both cases, more calls bought is a bullish thing to happen, meaning buyers are in the market. More puts sold is a bullish thing to do. Therefore, buyers are in the market. And so if it's one or the two, whatever that is, the blue line above the gray line means they are buyers in the market. And you may say, wait a moment, how come they're buyers in the market and the market is really crashing, fairly hard? Well, because when looking at options prices, or when looking at options markets, I should say, we deal with multiple strikes and multiple expiration dates. And when calculating implied volatilities, we are applying the same formula that is used when calculating the VIX, which is looking at multiple expiration dates and multiple strikes above and below at the money. So somewhere, either above or below price, closer on date or further away in dates, somewhere there are buyers enough to push the blue line to be above the gray, but we don't know exactly where. So definitely at the current price or higher prices, there were no buyers. That's why the market fell. But there are buyers in the market, meaning that at any moment in time, when this climate changes color from red to blue, we may have a significant move to the upside, because we got buyers in the market, which is something needed, not only for a move to start, but most importantly, for a move to continue. And again, in this case, we are saying there are buyers in the market without saying at which prices, which is a very good news in the sense that, I mean, from a market timing point of view, we use the UFOs to know where the buyers are, which is obviously critical. But from a continuation of the move point of view, you want buyers to be available at multiple price points. You don't want only buyers buying at one price. Like everybody buying at 400. Well, that's going to help a turning point, but it's not going to help a continuation of the move. So, in other words, the blue line above the gray line is telling us that right now the market is falling. We're in a down climate. We have to respect that. But if that was to change, then we are all set for a potential move that continues in a strong manner to the upside. Now, the way to size the way to seize the opportunity in a way that is higher probability is to wait for a blue dot on the climate, and that will tell you the climate has changed direction and is confirmed, and now you're ready to shoot. Right now, we are still in a down climate, and while as I said, we are late to the party to go short. It's too early to go long with probabilities in our favor. We may be slapped on the face by having a continuation of the climate, like sometimes what happens when a lot of fear comes in. Now, notice in that case where the fear came in, notice how the gray line was above the blue line, meaning at that time there were sellers in the market. And when the blue line came back above the gray line, now we got again a situation where buyers are in the market. And if you look at when that was, it was more or less here. And from there, look at what happened, right? So again, it's very important information to look at these informations combined. And basically, the end result of this analysis is, as Mark was suggesting, that doing non-directional strategies, it's probably the most intelligent approach, because going short is too late, going long is too early. So doing non-directional, it's definitely the way to do it. Now, when looking at the VIX, we can see that there's been an interesting pop on implied volatility values. We got 14% increase on the implied volatility, which is bringing the values of volatility that were becoming a bit boring at 16, 15 something, all the way to 20 something. And while I wouldn't say that this is very high volatility, because we can see here not so far away values of 30, 20 is 10 points lower, so it's not like it's so high, but definitely it's much higher. We're off those bottom levels, and therefore I'm with you, Mark, that approaching today's trading by doing iron condors or identifying iron condor opportunities would make a lot of sense. Will not be crazy, to be honest, to also do some non-directional trading with high or positive Vega exposure, such as double calendars. It would not be crazy in the sense that it's not like volatility is so high, right, in the VIX, and you could certainly find setups and scenarios of some individual names that may have low levels of volatility in those, and therefore those could still benefit from double diagonals. But certainly a 14% pop on implied volatility, may have implied an even greater increase of volatility on individual names, and we may find stocks out there with great levels of volatility, nice levels of premium that pays decently for those non-directional plays with iron condors. And therefore, I agree with you. That could be a good way to approach it. So, long answer to your question there, Mark. I just wanted to give a full kind of like recap summary of the thinking process around identifying the type of market condition that we have in front of us, and therefore what to do, what to add to your account, which of course also it depends on what else did you have in your account before starting to trade today, because maybe you already got many iron condors, so then you don't do iron condors. Is that making sense? So now we are talking about portfolio risk management, which is obviously an important topic, but a different one. Good. As said, Ahmed, very good to see you, my friend. And I'm reading now the second question here from Mark. So, what videos give instructions for setting up NinjaTrader to do your futures strategy? Well, to be honest, we don't have. Let me bring. Give me a moment. I will bring our YouTube channel here, and I will show a couple of things. So, So youtube.com/tradewithufos. Okay, so this is our YouTube channel. Let me pause this. Here we go. And here, if you scroll down, you get to see multiple playlists. Okay, so futures, crypto, etc. You have all the playlists here. So when you look at the future session, if you look at the playlist for that particular um, type of trades, which is futures, in this case, we are all the time utilizing NinjaTrader. So any of the sessions that you have here, you will see us use NinjaTrader. Okay, so that would serve you to understand how to use the setup. Okay, how to use the setup. Now, different story is how to configure the setup. If you want to have the setup, like for example, let me see this. This was one future session I did. That was last year. So if I fast forward here, okay, it's already here in the middle. So great. Give me a moment. Okay. Just a little ad there, which should go away very quick. Okay. Almost there. Here we go. So if I go here, Mark, I'm not sure why it's taking so long. Typically, YouTube, you would expect it to be faster than that. Okay, well, let's be patient. It should show up in just a moment. Yeah, I see your other question as well, Mark. So I'm getting there in just a sec. Oh, I'm not sure what's happening there with this YouTube video. Yeah, this is really strange on how slow it is working. Yeah, very very strange. Anyway, I guess it will load in a moment. I guess this is the risk of doing sessions live. That sometimes you have issues of this sort. But anyway, so what I was trying to say is that yeah. So Mark, you're talking about this more complex desktop configuration, right? Because when you get Ninja, so let me load the platform as well. No idea what's happening there with YouTube. So slow. Anyway, I'm loading Ninja. Okay. Something must be happening on my machine right now. This is it's like everything is really, really, really slow. So hopefully you hear me well and the session is being streaming correctly. Sorry about that, guys. But basically, so when you get your NinjaTrader apps, so what we send you when you activate the apps is we send you multiple desktops. One looks like this. It's called, actually, it's not called a desktop. It's called a workspace in NinjaTrader. Okay, so one looks like this. So you have a market analyzer with an alert log and a chart. And I am not connecting to data, so give me a moment. We'll connect to data. Should have turned on Ninja before the session. Here we go. So data is coming now. Okay, so you have here your auto climate with your alert log, with your market analyzer. So this is one of the workspaces that you get when you subscribe to the apps. If you subscribe to Auto UFOs, we also, our activations team emails you another type of workspace that looks like that. It's kind of like the one with the auto climate I just showed you, but instead of auto climate, it has the UFOs, as you can see. The format is similar. You have an alert log, you have the market analyzer, and you have the chart. Okay, very similar. And then I believe that, Mark, you are referring to this other workspace, which I'm loading now. I just close this because the YouTube video never got to load, so I'll just get rid of it. Okay, and this is the workspace I believe you are referring to, the one that is loading now, which is a workspace with multiple charts, where you have the dome in the middle. Here we go. I'm getting messages on my other computer screen, so give me a moment, please. Oh, I got Bitcoin there, which okay, let me change this to S&P, for example. Here we go. So here's the S&P. And so what you have here is that you have a chart on the bottom with the auto climate, and you have a time-based chart, then you have tick charts on the right, which are loading as we speak. And also you have these horizontal lines. Okay, so let me mark it. So you have a horizontal line there, which is golden color, 4077.67, which coincides with the EMA line from the 15-minute chart, even though this is now plotted on a 2-minute chart. And the same thing on the volume chart here on the right. You will see that golden horizontal line will show in a moment, the moment the word loading goes away. And I have the data on the screen, you will see that horizontal line. So I believe that your question, Mark, and sorry for it took so long for me to load the whole thing on the screen, but I believe that your question is about, how do you set up all of this? How do you have, this, for example, this moving average horizontal line that represents the EMA from a different time frame, from a different chart, how I have this there. I guess that this is really your question, and the short answer is that you could just email our support team, and we'll send you the file, and you can just unpack it on your computer, and you have it ready to go. You just need to move the windows where you want them to be, and that's it. Now, to be a bit more detailed with my explanation, so I would tell you that really the tricky part of this setup, apart from positioning the windows wherever you like, the tricky part of the setup is the fact that on the smaller timeframes, okay, on the edge timeframes, 2-minute, volume, and ticks, okay, on these edge timeframes. So what happens is that if you were to right-click and you were to data series, so you would see that this chart has two data series. I got a 2-minute data series and a 15-minute data series. Okay, I got two. Even though you only see one, I got two. Okay, and notice how for the 15-minute, I have it set up as transparent. So in other words, the data is there, but it doesn't show on the chart. So I only see the 2-minute time frame. Well, I do benefit from having the 15-minute data on those upper chart windows as well. So then, because of that, then what I could do is I could right-click to insert indicator on those upper charts. And then I could go ahead and say, I want to add an EMA, okay, but I want the input series for the EMA to be the 15-minute time frame. Instead of the input series to be the 2-minute time frame, because I have two data series on that same chart window, I could tell my EMA indicator to refer to the 15-minute time frame data instead of the 2-minute data, and therefore the moving average plotted on the upper charts, it's going to be calculated based on 15 minutes. Then the way I am plotting it as well is the plot style is a horizontal line instead of plotting a line, which is the normal way to plot EMAs. I am plotting a horizontal line, and therefore it looks like what you can see here on the right, this horizontal line, which is pointing at a number, which is the EMA from the 15-minute time frame, because all these charts on the top got two data series. So it's quite easy to set up by yourself. But again, if you know if this is if you feel it's a bit complicated or you're concerned you're gonna make a mistake or something like that, just email our support team, support@traddictiv.com, and they'll send you the files that for you to open from your computer, and that's it. Okay, so it's fairly easy. Cool. So back to the chat to see other questions we may have. Okay, Mark. So okay, so Ninja Trader is done. Good. So next question. Okay, next question in the line. Could one use the probability cone to determine whether to do iron condors or double candles? Yeah, I mean, it's definitely a very powerful tool. So let me close Ninja. So I guess we're gonna focus now on the cone. So I'll be using top for that. And also, by the way, something that you may have noticed, and if you haven't, so let me tell you. Let me bring our website to screen. So this is obviously, as you all know, our website. And as you probably also know, if you scroll down all the way to the bottom, there is a Q&A forum on our website. So if you go there, we have updated the forum. It has a little bit of a different format now. The way it works, to be honest, is the same. So if you want to look for something, you just type what you're looking for. So maybe you're looking for iron condors. So you click search, and if there is anything about iron condors, because someone asked questions about iron condors, so you'll see it here. So so there is something related to the Auto UFOs app that talk about iron condors. So you can come in here and take a look. You click, and then you can go ahead and read the question. Okay. It talks about iron condors here, which is the reason why you got these results. So again, there is plenty of information in here that could be useful. Again, the way this works is you either come to the forum and you click, you type whatever you're looking for under search, and you get your results. Or you just look at the questions one at a time. There are multiple pages. Or if you want to post your own questions, so then, sorry, I just went to the wrong place. You go to QA forum, and notice that in order to post your questions, once you enter the forum, to post your questions, you need to log in. Okay, so here's my username and password. So you just need to log in, and the moment you log in, you are now allowed to post your questions, to upload charts, and everything that you would normally do. So you have here now a place to have a title, you have a place to have a proper explanation of what is it that you want to do, and then if you want to upload attachments, you can upload attachments. And then, of course, I recommend you to check notify me of follow-up replies via email. So if someone responds, either us as a support team or anyone else, because this is an open forum for people to interact and collaborate. So other people could actually provide responses, but the moment you check mark this, if you are the one who posted the original question, now you get notifications, whoever responds to you, and you get that on your inbox. So now you know you got the response, and you go and check. So certainly, I would say a better and improved version of what we had before, and I recommend everybody to use it when you have questions, and including when you need something, you can certainly send an email to support@traddictiv.com, or even if you need, for example, a copy of the workspace for NinjaTrader for advanced futures, you can also post it here, and you'll get it. So not an issue. Okay, cool. So I just wanted to comment on that. Now going back to your question there, could I use the probability? Okay, and I'm also reading your comments, Mark. Yes, you're interested in the configuration information. Okay, so hopefully I gave you enough details so you know how to implement it yourself. If you need me to review it one more time, or you need anything else, please feel free to let me know. Happy to explain it again if needed. But if that was good, great. Also, of course, this is recorded, So if anyone else needs to see it, it's there. Now, talking about Aaron condors and double calendars or even double diagonals. So I'm gonna move here to daily time frame, and I'm just gonna type any stock, for example, Meta, if you want. So when we do that, actually, let me switch to Apple, for example. Yeah, that may be a better case. Or let me see, JPM. Yeah, that's gonna be even better. Okay, I'm looking for a market that has UFOs above and below the cone. That way, if we discuss something specific, at least the setup is more likely going to lead to some sort of a trade instead of any other stock that maybe making all times high. For example, you don't have UFOs above price. That's why I changed symbol. Okay, but anyway, so here's the probability cone. Okay, and the first thing here is okay. So what if I get rid of it? So if I get rid of the probability cone, then the probability cone is gone. And if I want to add it, I just go to add study probability cone. And once I do that, I have a collection of options I could select. The way I like to use it is having one standard deviation applied to historic volatility. And that is for 63 days, 42 days, and 21 days. And I use three different blue colors for that. 21 days is 1 month of trading, 42 days is 2 months of trading, 63 days is 3 months of trading. And I am looking at what the statistical range is based on what happened in the last 1, 2, 3 months. If that market was to behave the way it's behaved in the last 1, 2, 3 months, and I was to project that into the future. So a one standard deviation of price movement, it's a calculation that interests me. So I know where that market is likely going to be. But also I'm interested to do the same calculation instead of based on the historic volatility, which is what happened in the last 1, 2, or 3 months. I am interested in knowing what may happen to the stock based on the implied volatility built in the options. So in this case, I'm looking at the CIV mean instead of historical volatility. I'm looking at the CIV mean. And I am also projecting a one standard deviation, which is 68.2. When I do that and I click OK, I end up with three blue lines and one red line the way I had before. Now, before I get into that, I want to mention the fact that I am using one standard deviation in all cases. So those are different calculations. 1 month historic volatility, 2 months historic volatility, 3 months historic volatility, and implied volatility. That is my reference. But then for projecting price in the future, I am using one standard deviation for all of it. Why not 2 or 3 standard deviation? Well, because of course you would have wider ranges, which would increase the probability of your trades to be profitable if, let's say, you are doing non-directional trading. But the ranges will be so wide that even though you would increase the probability of being profitable, the options that you would be selling in such cases, they would be so far out that you would get paid extremely little amount of money. And yeah, fair enough, the trade would be very much profitable much more often. But the day you get hurt, it would be so bad that then you would need so many trades to make up for the loss. And on top of that, because the options are so far out, they pay very little. So you would truly need so many profitable trades in a row to happen just to erase one loss, which would certainly kill the performance and maybe even get you underwater for years. So it's a typical mistake for when it comes to trading non-directionally, which is to be way too hopeful of not being wrong instead of assuming that risk and rewards go hand in hand and be willing to take some risk. So in my case, be willing to take some risk. It's done by using the setting of one standard deviation, which you may want to go ahead and use 1.5 or 2 or 0.5. All of those is going to be your decision based on your trading plan and backtest. My way to do it is one standard deviation, but the reason why I do that is because one standard deviation is, relatively far, because it's one standard deviation above and below, right? The current price, but at the same time, it's not that far away where the options you sell are going to pay you nothing. Okay, so that is my little explanation there for the settings on the probability cone. Now, if you were to do trades for non-directional purposes, and everything you were to do was based on the probability cone only, uh, it's a very good reference, but it may mean nothing, right? Because I mean, look at these type of moves that happen sometime. That would go, way further away than what you want price to go, and that would very likely hurt you and hurt you bad. So, in order to defend yourself in a way that is a bit more serious, apart than simply having a reference, because those price points from the cone, they are very intelligent. It's a great reference, but that's only that. That's only a reference. This is not a support or a resistance. And if it does happen to be a support or resistance, it's just that that day you got lucky. It's just a mathematical calculation projecting price, which is intelligent, but it's not a real support or resistance. So the idea is to use those lines as a reference, and then either above or below, or both, depending on the strategy you use, look for UFOs to defend yourself. Which, if you recall, the way I do it is I use UFOs on a lower time frame, below those lines and above those lines. I am using UFOs in a lower time frame to set my kind of like line that I draw on the sun, which is my hard limit, where if price goes beyond that, or something is happening around those price levels, so then I'm ready to act on other risk management rules, because I am now assuming that my trade has failed, and I get in defensive mode, I get in damage control mode, instead of considering the trade is working well. So again, those lines, the priority cone is there for reference purposes. It's not a tool that by itself will create amazing trading results, but by using it as a reference and then relying on the UFOs, you are now positioning yourself in a way where you have something more solid to defend yourself in case the market was to start moving very fast in one direction. And if it was to be the case, those UFOs are likely going to help you well by having the price move very fast in the opposite direction after it hits those UFOs. Okay, so that's something to keep in mind. So, could one use the probability cone to determine whether to? Okay, so now to determine the setup for an iron condor or a double calendar mark, you would use the concept I just explained. Use the cone as a reference, and then look for UFOs above and below in a lower time frame. But to determine, which I think that was your question, to determine if you wanted to do an iron condor or you wanted to do a double calendar, then yes, the probability cone can also work very well if you have it set up the way I have it set up, which is blue lines for historic volatility and red lines for implied volatility. So yeah, that helps too, because the fact that the red line is within the blue lines means that the expected volatility in the future is less than the speed of movement that stock has been proven to be capable of moving at in the last 1, 2, and 3 months. In other words, options are on the cheap side at this moment in time by having the red line inside within the blue lines. If the red line was to be on the other side, let's try to find something. I'm just thinking maybe oil stocks may be inflated with volatility. Here we go. So XOM, ExxonMobil. So notice what's happening with the red line. The red line is beyond, instead of within, is beyond two of the blue lines. I mean, there's still one line, one blue line, which is still beyond the red line. But still, the fact that the red line is not inside, right, and it's beyond, that is telling you that the expected volatility is, just like replicating the greatest speed at which the stock has been moving in the last 1, 2, 3 months, which is probably that type of a speed. Those very long bars. I mean, that is not a joke type of move. That is really, really powerful. Okay, including the prior candle, because the close was there, so major gap on the way down and continuation, and another gap and continuation. That's a lot of speed of movement, and the red line is almost matching that, right? So that is telling you that volatility is high, and therefore you would want to do an iron condor, where if I go back to my prior case with JPM, you would conclude that the red line being within, then implied volatility is low, and therefore you would want to do double calendars, okay, and take advantage of a positive Vega exposure because volatility is likely going to increase. You can also add other studies that are available on top, such as the options over or under priced. So you can do that, which is a comparison between the implied volatility, for example, 63, and the CIV mean. And if you were to do that, so we are probably dealing with a case of underpriced for JPM, where if we are looking at the prior case, which I looked at XOM, so we are talking about overpriced. Now, notice overpriced just a bit. It's not like here. Okay, why? Because the red line, it's beyond two of the blue lines, but it's not beyond the whole thing. So, so that's why if I was to go back to, for example, those dates, which I can with the probability cone, I can just drag it. So if I was to go back to here, so notice how on those dates, the red line is beyond all the blue lines. Okay, it's beyond all the blue lines, and therefore, yes, on that date, we're talking about very overpriced options, even more convenient to do iron condors. So you can look at it from different angles. In the end, it's the same thing. Probably also you are scanning with the matrix, so you can set your conditions there, and in the end, you can get the results that are already overpriced, even without looking. But certainly, the probability cone could help for this purpose as well. Great questions. So let's take a look at what is next. Ahmed, Jose, would you please let me know when we'll have the gamma squeeze in our top software? So this is a good question, and this is something that I'm not sure. So it is a great tool. I mean, I can show you what it is for the ones of you that don't know what it is. My version of top, of course, is experimental in the sense that we are always doing developments. So what I'm about to show you, you cannot see it yourself. So if I go to Add Study, here I have some tools, such as the Gamma Squeeze Index. And if I add it and I click OK, so this is going to report on the chart a series of horizontal lines which represent price points on the chart where there is a potential gamma squeeze opportunity, which means that if price was to go to those lines, there are many options that need to be hedged by the market makers, and if they were to hedge them, so those lines would very likely act as support or resistance. So in other words, is another way to think of on-field orders, which it's the most powerful way to use them is when you see a line and is lining up with the UFO. So now from the asset itself point of view and from the options point of view, so we are likely going to see plenty of on-field orders. So this tool is there, and from a theoretical point of view, it's making a lot of sense, but we've seen lots of variability depending on the assets we've been applying it to. And in that sense, I'm not ready to release this as a tool that would generate enough of an impact compared to what the UFOs could produce. Yeah, so it's all about timing. I guess there is a little bit of fine-tuning to be done, and we may release it. And if we do release it, all of you using top will have it automatically. But I am still in this process where I am debating, what's best, because we've seen, certain things that are suggesting that it may not be that ideal, okay? Unless, you were to combine with the UFOs and you were to do a series of extra steps. And if that's the case, well, maybe the ideal way to release it would be to have a tool that embeds it all together. So again, not ready to release it. Ahmed, I appreciate your question. I understand your interest. You mentioned that before to me. Again, happy to show it to you here as well. As you know, we are working on this, but it's not a priority at the moment because, it needs a bit more work. Okay, that's why. Yeah, Ahmed, I mean, if you combine with the UFOs, again, I kind of just said it a moment ago, isn't it? But yeah, so the problem is that you have to come up with UFOs and which time frame. The gamma squeeze only works on the 5 minute time frame. It doesn't work on other time frames. So again, there is some more work to do to take this tool to a level where I would be having a smile on my face when answering your question, instead of being a bit hesitant on how to explain the situation we have, which is it's a great tool, no doubt. You could combine it with UFOs. Now it gets even better, but realistically speaking, I have to be humble and tell you that we have a bit more work to do for me to have a smile on my face when releasing it as an extra functionality of top. So I guess that the answer is someday, but right now I will not be able to phrase a specific date because of those reasons. Okay. Okay. What else do we have here? Thanks for the question, Ahmed. Mark, the way I'm looking at it, it is red cone inside the blue comes options premium lower, red cone outside the blue. Yes, correct. You just summarized what I've said very well there, Mark, with your comment. Yes, this is absolutely correct. Great. So, my friends, we got a little less than 10 minutes to go before the session is over. So let's take advantage of these few extra minutes. What else is out there for me, guys? What other questions do you have? Maybe you don't have any question. Maybe you wanna have some comments. Maybe you just wanna share how things are going. Whatever. We have this monthly opportunity to get together, and I'm always keen to hear from you at all levels. Of course, I'm expecting questions because I'm adopting the role of your coach in these monthly sessions. So happy to be your coach, but also we can just talk from trader to trader anytime apart from our open meetings. By the way, Ahmed, since you are here with us, I'm not sure if you are aware of our monthly meetings or not, uh, but I believe we did not have you in any of the meetings with us. Maybe it's just because you happen to be busy at that time of the day. But let me bring the calendar to the screen so you see it, and for everyone else as well. So if you go down all the way and you go to calendar, so you will see that twice a month we have UFO traders open meetings. Okay, and these are called open meetings because they are open to anyone. So anyone means as long as you have a username on the website, and to have a username on the website, you simply go to, or in this case is, let me log out so you will see. So if I log out, you have the free sign up. So if you click free sign up, again, it's free. You have what we call the Trade with UFO membership. So we'll send you a welcome email and things like that. But now, most importantly, you have a username on the website. So the moment you have a username on the website, you can come to these UFO open meetings, UFO traders open meetings that we do on the first and the third Monday of the month. And the way you come into the meetings is by just coming here to trader meetings, and you click on trader meetings, and you need to log in, which I just tell you, and here you got the meeting room right here. You just type your name and you're in. Okay, so those are trader meetings. They are not webinars like today, meaning that you share your screen, you turn on the camera, you turn on the microphone, and we're just having a traders meeting. We're just talking to each other. I often take a little bit of the role of being the lead, if you wish. I guess it's out of the habit we all have, me to lead and you guys to ask questions. But at the same time, I don't need to be the one leading there because this is trader meetings, and I just happen to be there twice a month. But you guys also can go ahead and use this room to meet any other time. So that room is open 24 hours a day, every day. This is very kind of you, Ahmed. Yeah, very, very nice of you, my friend. Very nice of you. As always, you are always so kind to me. So yeah, for sure. I mean, we've changed the model a little bit on how we do our sessions. This has a lot to do with, how we are organized, the team, etc., etc. So we do a few less sessions that we used to do in the past, but in a way we are a bit more organized because we have the meetings, which we didn't have meetings before. It was always webinar. Those meetings, by the way, they are not recorded, they are not posted on social media, not posted on the YouTube channel, so it's very private. Then we have the Q&A forum, which I showed you before, which is a much better place now to ask questions and also read answers on questions from other traders, because there is a lot of content there and more to come. And then in the calendar we also have the trading and review sessions once per month with your coaches, with Jose, with Bojan, with Becky, with Josip, and somehow I believe that our structure is a little bit more adequate. We also have the 3D market commentary on the Mondays to prepare for the week ahead. That's every Monday. So I guess we are, I would say, more organized than before, while we do less sessions than before, or maybe I should say I do less sessions than before, just because I happen to be very busy as well, and that's all I can do. But for sure, happy to take your questions anytime, and if you need any extra help, just know I'm here for you guys. The whole team, we are all here for you. So if needed, let's say something's going on that's critical, important, something that maybe I don't know. Let's say, for example, the CME launches a new micro contract that you are very interested in trading, and we never talked about it, but it's very important to you. I know, whatever. I mean, happy to improvise a special session for that purpose and just run it, and that may be based on your suggestion. Okay, so we are here for you guys, and we mean it. We mean it, but that also implies that we need to interact and communicate, and therefore, please do not be a stranger. And I know many of you communicate all the time, so you are not strangers. But I also know that a bunch of you, maybe too many of you, sometimes, like for example here in Singapore, I had the opportunity to meet with many of you recently, and it was pretty clear to me that when communicating online, some of you are a little bit shy. Not sure why, but it happens, and it's a shame, because to be honest, it's 2023, and using online should be done just like in person, even though it's different. But we should use the resources the way they are. Okay, so count on us. I'm happy to support you guys, and thank you for joining me today. I guess we're gonna call it a day here. It's always a pleasure to spend time with you guys, and keep up the good work. It's always good to hear from you. Good to see your questions. Your questions always denote hard work. We are building stuff, guys, and that's one of the reasons why I'm busy when it comes to tools and other things as well that I'm trying to put together. We may soon, again, I don't want to confirm anything because it's not confirmed yet, but we may soon also have a way to help you guys to be funded at no cost, which is pretty cool. So I'll explain that more when that's clear. But beyond providing trading tools and support, we may be in a position soon to provide also trading capital for you guys. As I said, at no cost. Okay, of course for serious traders, you will need to do a little, let's call it a little examination, a little something to prove that you are serious, which I know you guys here connected live today, you are. But for many more new members of the community that are not been with us for so long, they may need to pass some sort of test to prove you're serious, and from there unlock some trading capital, guys, for you to utilize in your trade. So we are building a lot of things that I'll put together little by little, so it's well done, and I will be communicating with you as all those things are ready for you guys. And again, happy to keep supporting and do everything we do. Ahmed, your question related to the gamma squeeze, you saw my answer. The philosophy is there. We are building good tools, but they have to be impeccable when we put them on your hands, and that takes time. And so I am in a process where when we started the company, because the company was brand new, so we had to rush many things out, because then you don't have a structure or a process. But then as the company is maturing, so we are fine-tuning our processes and becoming more experienced in many things. And therefore, since we also have many more tools and we support many more platforms too, so launching new tools is something that we are going to take just a bit more easy. So when it comes out, it's kind of final version, instead of having to go through a maturity type of, an evolution process that leads to maturity. So we want to put things in front of you that are mature enough already from day one. So that's why my answer to you was not, black or white, if you wish, because I am very much tempted to launch that as a product because it's almost there, but just need a little bit more. Okay, so that's what it is. Anyway, my friends, take care, everyone. As I said, always a pleasure. Keep in touch. Do not be a stranger, and keep up the good work. Okay. See you soon, my friends. Bye bye.